This is a lecture from OpenTuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
Chapter 6 looks at the influence of information technology on organizations. And here is a list of the typical influences. First of all, many organizations now have a huge amount of historical data available to them. This is their own internal trading data, sales, information about customers, stretching back maybe 3 to 5 years. The initial technology for this was really developed in supermarkets with loyalty cards, where when customers are buying their shopping and they scan their loyalty card, the system records against that customer exactly what they've bought and when they bought it and so on. And this is stored in a data warehouse. And then the data warehouse is analyzed. The process is called mining, data mining, where you go through this information hoping to find unexpected associations and patterns that will enable you to improve performance. More current data is currently available. So if you look at the sales made in a particular day, it can be broken up, summarized in all sorts of different ways, by product, by customer type, by salesperson, by geographical area, by time of day, and so on. And perhaps the real problem is making sure people are not inundated with data. It's very easy nowadays to produce this fantastic amount of data, but it's very hard to really discover anything useful it might be saying. And sometimes there are exam questions where reports are presented to you and you have to criticize the reports. And quite often one of the criticisms is there is simply too much data here, too much detail, because what you want to see as a manager is really the important trends which are occurring. I suppose because of technologies such as email, people tend to expect very quick replies, very quick responses to any queries which they may be issuing. And perhaps the expectation of the quick reply is actually that people expect a reply quicker than they actually need. But if a reply doesn't kind of come almost within a couple of hours, they're almost sending follow-up emails and so on. Remember that requiring speed in producing information often has a cost associated with it. And we have to make sure that the cost of producing information quickly enough is a cost which is justified by the benefit coming from it. IT also causes changes in business structures and activities. You only have to think of what's happened in the music industry or travel agents to see how they've really had to alter very radically what they're doing, how they try to make money. To some extent, travel agents finding a very difficult job. Where exactly is their niche now when there are so many ways of going directly to airline sites or hotel sites or sites like Expedia? Activities will also alter. Again, perhaps we should think of books, publishers. They still publish books on paper and distribute those through bookshops, but of course there's now an increasing demand for e-books and less publishing on paper. E-commerce, buying and selling essentially over the internet. It's hard to think of any reasonable sized shop which doesn't have a website which allows you to order goods and have them really essentially delivered within a few days. And organizations have to think, if maybe 50% of our business has gone online, what are we going to do with the shops? Do we need as many shops? Do we need shops as large as what they are? And the like. They will, of course, need to set up an efficient distribution center and an efficient IT system which allows that distribution to take place. Activity-based costing will become much easier. We'll see in a later chapter that activity-based costing takes a lot of care over the calculation of overheads. If you don't have IT, it was a rather perhaps tedious manual job doing all of this. but with IT, simple spreadsheets, it becomes much easier. Much wider distribution and availability of data is also there. We have corporate intranets. So everyone in the organization can be given access to information more or less instantly. You can share some of this information through a website with customers and suppliers and so on. And also, I think very large amounts of external data is available. If we just concentrate maybe on the internet. Before the internet was really around commonly, and many companies wouldn't have had websites, it was really quite difficult perhaps to find their product lists or their prices. They're always, you may be set up for their product list once a year, twice a year, see their prices twice a year. But now, of course, you can continually see what their prices are. You can continually see maybe what the price of an airline fare is being offered at, and so on. So basically, far more data, data far more widely distributed, data often available in more detail and with greater speed. Now, let's go to the next slide here. And, oops, there we are. Let's look at, first of all, information needs in a typical manufacturing business. There isn't anything terribly unusual to say in here. I'm going to spend hardly any length of time on it. But then the next slide will show us how maybe the information needs of a service industry maybe differs from this. So typically manufacturers will need to know about the cost of the materials, labour and overheads going into their production. They will from this be maybe producing operating statements showing usage variances, price variances, efficiency variances and so on. They will be keeping track of what orders are in the pipeline that they have to fulfill. They will keep track of inventory which is available and inventory which is perhaps needing to be ordered and so on. If we go down towards the bottom of the list here, resources. What staff do we have available? How well are staff timetabled perhaps to make the best use of their production capacity? How are we using machines? What are we actually competing against in terms of the features and the prices of competitors' products? Innovation. What new products are being underdeveloped, what new products are under development either by ourselves or perhaps by competitors. And we'll see later in the course that innovation is a very important prerequisite to ensure that you keep competitive and performance keeps buoyant. Now, how do service businesses differ? A service business will be something like a hotel offering you a room for a couple of nights. And the differences in the nature of service industries or service businesses can influence perhaps the sort of information which needs to be available. And first of all, there is heterogeneity. Heterogeneity means that quite often each customer is being offered a different service. For example, if you were a car manufacturer, then you make thousands and thousands and thousands of the same model. But if you're in the service industry, let's say accounting or law, each client will come along with a unique set of circumstances, unique set of problems, and you have to essentially design an offering, a service, if you like, tailored for those people. What are the information type of implications of this? Well, costing is clearly one of them. Different services are going to demand really different prices being charged. The different teams will be needed. So if you have a very difficult specialist law case, perhaps to do with consumer law, then you need to make sure that you can draft in lawyers with that particular expertise. So it's not just kind of 1, 2, 3, 4, 5, all the same. It's going to be changing every job, and we need information technology which allows us to construct teams and to produce a good, unique service. Perishability. Perishability, if we go back and let's say hotel rooms, perishability means that if the hotel is half empty tonight, the potential charges they would have made on 50% of the rooms are lost forever. You can't carry forward the empty rooms to the weekend or the next major holiday or something of that sort. So we get a kind of, or maybe on a daily basis, you get one opportunity per day to maximize your income. Similarly with airlines, once the aeroplane takes off, you can't fit any more passengers onto it, even if it's empty. So perishability means that we have to try and maximize the marginal revenue as best we can. And there may be clever pricing strategies that as we get down near the cut-off time, as we get near perhaps the takeoff time of the aircraft, then we have to try to entice more people on. And we know that prices of airline fares go up and down very regularly as they try to get the extra passenger, but at the same time making sure that they aren't too predictable. Otherwise we'd all wait to the hour before the flight was going to take off and assume it's going to be the cheapest and try and book then. Intangibility. Intangibility it really means you can't see, touch, kick one of these services the way you could with a product. How, therefore, are you going to explain to a customer what the customer is going to get? There is no point in showing an audit client an audit file. That doesn't explain what the audit is. So we have perhaps a bit of an uphill struggle here on intangibility, convincing this potential client, potential customer, exactly what they're going to get for their money. Can IT help in this? Well, in some cases, if you want to buy an ebook, that's kind of, I suppose getting back to a product to some extent. But very often, companies like Amazon allow you to browse a few pages. A company like iTunes, if you're thinking of buying a track of music, often allow you to hear about 30 seconds of it and so on. Working hard to give you the best impression they can of what you're actually going to be buying. Simultaneity. Simultaneity means that in a way, the delivery of the service is instant. When you're making products, it could be made today and not actually delivered to the customer until a month's time. But very often in services, if you are giving somebody a meal in a restaurant, if you're giving somebody a ticket for a train and so on, the purchase and the consumption is simultaneous. What are the problems with that? Well, one of the problems is quality control. In products, I can make a product today, I can subject it to quite a lot of inspection, and only when I'm sure the product is right do I have to sell it to the customer. But if I am supplying a client with advice, and we're just kind of talking to each other, or if somebody comes into a restaurant and they're asking about an item on the menu and I'm trying to describe that to them, really, once I've said something, I have to get it right first time. There is no kind of quality control which can be applied afterwards. And this can mean that the training has to be better. It can also mean that, for example, in call centers, so that people give the right information and ask the right questions, quality is controlled by really bringing up a script in front of them. So that depending on the reply given by the customer on the phone, then they're directed to ask another series of questions. And this is very important in maintaining an equal or high level of interaction for every customer. No transfer of ownership. Basically, a service is very often a kind of transitory affair. You get a hotel room for a night, you get a meal for a couple of hours, and so on there. And you kind of leave with nothing but the menu, leave with nothing but your memory to some extent. And this means, it is said, that some people expect better service than they do products. Because if you're not going to leave with kind of something in your pocket that has a permanent presence, you will potentially be quite demanding. When you're receiving the service, you will want it to be a good service. And again, it is, I suppose, how we're going to make sure that everyone is getting the right level of service. What sort of training, what sort of information do we have to make available to our employees to make sure they deliver it? Here we have some of the terminology associated with information technology. And the first one, data processing here, this is really a term of the 1960s. This is when the largest companies began using computers to help their businesses. And they went for easy wins. They went back then for wages and salaries, looking after the receivables ledger, somewhere where there's lots of kind of repetitive calculations, really. And the person in charge of IT was known as a data processing manager. It was essentially automation, doing by computer what used to be done with roomfuls of people. And then things progressed a little bit. Information management information system here, this is really a child of the 1970s. It was realized that once we begin to record transactions on a computer, say your receivables, it is then very easy to take that information, that data, and to manipulate it and to present it in a way which is useful to people, so that it's relatively easy to produce age receivables analyses, for example, and sales analyses. So this was information which is used by management to make decisions, and indeed sometimes you can allow the computers to make decisions themselves, because these are fully what are known as structured decisions. Decision support system is really something that would have come in the 1980s. A decision support system does what it says. It supports managers making decisions. Best example would be a spreadsheet on which you have a financial model, and the manager is thinking, what should next year's budget be? And the manager can put in different assumptions about selling prices, volumes, costs. The manager can try out what-if experiments, helping that manager to kind of zoom down or to go down and eventually decide on a budget which looks kind of viable. So spreadsheets were really invented around the beginning of the 1980s, and this spawned a great aid, really, in supporting people making decisions. Executive information systems, really, I suppose, 1990s were coming in here. This, again, as it says, is information for executives, people at the highest level within an organization. And the characteristics, particularly, that you want to see of an executive information system, there's a lot of external information needed. The executives making the long-term strategic plans for the organization need at their disposal lots of external information, perhaps about forecasts and interest rates, perhaps about the economy of a country they're thinking of going into, perhaps about the prices which their competitors are thinking of charging or are charging, and so on. Expert systems have been a little bit disappointing. The hope had been for expert systems that you can capture the knowledge of an expert, and then the computer can make similarly reliable decisions. In context of a business, you might be able to find experts who can forecast share prices, and indeed that's what many firms of stockbrokers suggest they can do. You might find experts who can forecast exchange rates or interest rates. This is what you pay economists to do. And the hope was that these very difficult decisions, we could sit some economists down, kind of question them, How have you decided that the interest rates are going to go up in June and down in August, or whatever's going to be happening? In fact, for those sort of very complex decisions where there's no right answer, it's very difficult to predict interest rates. It's very difficult if a world event happens, if there's another, say, tsunami of Japan, and the whole economy of the world is kind of disrupted a little bit. An expert can try to bring that in almost instantly, but how are you going to go and reprogram a computer system to take account, yes, there's been another tsunami in Japan, this is pushing down the world economy a little bit, and this is probably going to require interest rates to go down. Very hard to keep up to date. Where expert systems have found a little bit of a home is where you have a complex decision-making process, but the decision-making process is really kind of cut and dried. An example would be an employee comes and says, what pension am I entitled to? Well, pension entitlements are very closely defined by law and by contract, and you can answer that question by going through a whole series of kind of yes-no questions, or how long have you worked here? What's your salary? Do you have any children? Are you married? What sort of contributions are you making? And you go through a very complex decision-making process, and you come out with an answer at the end. And of course, it's easy for experts to make maybe a little error in that. But once the computer system is programmed to make this series of kind of yes-no deductions, then you can have it fairly easily producing reliable answers. Databases, all we say about databases is it's a vast array of data, a vast amount of data which is kind of held in one place. And the characteristic of a database really is many users. If you have a vast amount of data held in one place, it does rather imply it's going to be potentially useful to many diverse users, and they're given access to this on very often a selective basis. I've kind of mentioned already data warehouses and data mining. The online transaction processing, this is where you're recording the sales transactions as they happen, putting it into this vast warehouse. And then the data mining, that's the online analytical processing. That's where you go through this vast amount of data, hoping to find something useful. Knowledge management is where we are now. It's kind of gone from data processing up to knowledge management. This is kind of the 2000s here. And what is knowledge? And about the best definition you can get is that knowledge is information in somebody's head. So I could have a filing cabinet over in the corner, and the filing cabinet could, have age receivables listings sitting in it. But unless I read them and make use of them and make decisions about whether or not I want to change the credit limit of a customer, it's rather useless information. Only when it gets into my head does it become useful. It's then knowledge. Two sorts here. Explicit is more or less written down. It has been captured, it is recorded somewhere, and once it is written and recorded, you can find it. You can search Word documents, you can search your hard disk for particular words and terminology. You may have put it in a database which will retrieve it very easily. The challenge really facing people now is tacit knowledge. Tacit means is essentially quiet or secret knowledge, information or knowledge that we don't even know we have. How is it that one salesperson regularly performs much better than another salesperson? What is it about the way they introduce new products to a client? What is it about the way in which they persuade a client to try out or to buy that product that seems to be so much more successful than many of the other salespeople? You ask that salesperson, how do you do it? They probably don't know. It's probably just almost a natural function of their personality. But if that salesperson leaves, then they take that knowledge with them. So what organizations are trying to do is to try to get this very important knowledge out of people's minds, perhaps a know-how, perhaps a way of approaching customers, perhaps information about customers, which this person has got up here, but which is recorded nowhere. Because it's recorded nowhere, it goes when the employee leaves. And that's going to hurt performance. Enterprise resource planning systems. Enterprise resource planning systems. We have commercial organization or products like SAP, which is German, and there's Oracle. Basically, what enterprise resource planning systems try to do is to almost tie everything together. That within one single system, they will, for example, have information on finance. It can report on what different customers are buying. It can be reporting on how quickly they pay. It will be able to project cash flow forecasts and so on. It'll be fully integrated with the budget. Within it also there'll be human resource information on the people we have available, perhaps what qualification they have reached, perhaps what sort of appraisals they've had, and competences they have. Marketing, we want information to be held about customers. What have they bought from us in the past? Because if you don't know what they've bought from you in the past, it's rather harder to sell something to them in the future, to suggest that they need maybe an upgrade in a product, or they could perhaps take out a maintenance contract on a product. Accounting, everything's going to be fully integrated. There you will almost get instant access at any time to what the kind of profit is running at and so on. And operations will help you plan the flow, say, of materials through a manufacturing system. It will organize the delivery of materials in, maybe to the warehouse. It'll organize issuing from the warehouse to the production line, then from the production line to the stores, and then from the stores to the customer. The levels of strategic planning, which we have talked about before, also affect the sort of information that you need. So at the corporate or strategic level, remember the people at the corporate and strategic level, they tend to be dealing with something about 5 years away, thinking, what will this business be doing in 5 years' time? What will it be making? What countries will it be operating in? So it's that long-term view is what we need. And for these people, the executive information system is the kind of made to measure. They need lots of external information. We said part of corporate planning was stuff like PESTEL, stuff like 5 forces. We have to understand outside the business what's happening as well as inside. Often this information is very summarized. It may be to the nearest $1 million. It's often forward-looking. These are the people who are going to be particularly interested in forecasts of next 5 years, and basically a large corporate plan for that. It is ad hoc, really meaning that it's rather non-routine. So the board of directors 1 week might want a report on Brazil, another week might want a report on what the exchange rates are likely to do, another report in the third week, maybe what's going to happen in the European Union, and so on. So non-routine reporting implies access to fairly non-routine information. And that's really the kind of summarizes at the top level. If you go right down to the bottom level here, this is a kind of day-to-day one. People looking after the day-to-day operations, this tends to be what's called transaction processing systems. These people are recording the purchases, the sales, the wages, and so on. This is very accurate. This will be to the the last cent. It'll be very detailed. It is almost always looking backwards. What did we buy? What did they buy from us? how many hours did this person work in that week, and so on there. And it tends to be very routine. Almost all internal, all routine. Every week you do the wages, every week you do the aged receivables analysis, and so on. Sandwiched between these two, you have the business level here. This is, if you think like 1 year, trying to get this year's budget is what these people tend to concentrate on. And they will be interested in management information systems. They will be interested in knowing, well, what products are selling well, what products are not selling so well, so they can maybe make refinements to the selling price and so on. They will see that, well, that customer hasn't bought for a long time. Maybe I should give them a phone call to see if we can encourage them to place another order, because this is how we'll get the performance of the operation up for the year. Now this slide is really just the value chain, and I've just put in here all the lots and lots of ways in which IT affects how a business can operate, hopefully increasing its efficiency and therefore increasing performance. So, starting down here at the kind of inbound logistics one, just-in-time inventory. IT will help us do without inventory. Just-in-time inventory implies lots and lots of deliveries coming in, and very difficult to do without IT. MRP1 means manufacturing resource planning. Manufacturing resource planning is really saying, well, if I get an order for 5 items, what raw materials does that order require? What components does that require? So the order for the 5 items kind of explodes into orders for all the parts you maybe need to buy from your suppliers. That's materials resource planning. Materials resource planning. And then stores. The stores may well be computerized, keeping track of what's there. Going along to the operations, we have MRP2, that is manufacturing resource planning. MRP2 means you are planning the materials, you're planning the labor, you're planning the use of the machinery, all based on the orders coming in from your customers, trying to tie everything together. Of course, robotic manufacturing has or automatic manufacturing has hugely increased the efficiency of operations. Interesting to see where this will go with what's called additive manufacturing or 3D printing, where you build up products gradually rather than carving them out. Again, we can have just-in-time. Again, we want flexible manufacturing, so that the manufacturing line can change, from product to product and so on. We get those typically now in cars. Somebody buying a car, they specify a color, they specify the number of doors, they specify the engine, they specify maybe whether or not it's got the air conditioning. The next car, will be slightly different. But all of the right components come down together onto the production line, so that you are almost producing a unique car for that person to their specification. Outbound logistics, the use of global positioning satellites to plan routes and to keep track of where your delivery vehicles have got to, is almost universal nowadays. Sales and marketing, websites, of course, hugely important. E-commerce, very, very important. Data warehousing and data mining, keeping this information, which will help us maximize our profits. Service at the end, we have total quality management, and we have frequently asked questions. Total quality management we'll talk about later on. But basically, total quality management means getting everything right. And part of getting everything right is initially keeping a record of what didn't go right and logging it very carefully and trying to identify, well, why didn't we get it right? Frequently asked question pages, something that appears on the internet. So instead of phoning up the supplier, and the supplier therefore has to have somebody manning the phone, perhaps we could encourage people to go to frequently asked question pages as a more efficient way to get help. The firm infrastructure, the top one, which we've got here, we have, just looking at one of these, we have, for example, intranets, where you can distribute to everybody in your organization information, newsletters, employee guidebooks, and so on, making it really, really efficient. Teleworking, allow sometimes people to work from home for at least part of the time, or to work remotely. That's EIS is Executive Information System, DSS is Decision Support System, ERP is Enterprise Report Planning. Technology development. In here we have computer-aided design, computer-aided manufacturing, we have automation. So computer-aided design allows companies to come up with new products much more quickly than they used to be able to. And this can often be integrated with computer-aided manufacturing. So if you draw a component, in some systems, that will enable you to make that component pretty easily. A company which has made huge use of this in being very successful is a clothing company called Zara. Zara produces about 14,000 different clothing lines per annum. So it's got a huge kind of innovative production of new clothes. And it makes relatively short runs of these, because if you've got 14,000 different lines of clothing coming off, you're only going to sell a limited amount of each line, really. And the only way they can do it is by computer-aided design, computer-aided manufacturing. It allows them to design clothing very, very quickly. Once it's designed, it can always be plugged in, and then the cloth is cut out kind of automatically to the right shape and so on. So they can have relatively short production runs, but done very efficiently. Human resources, CBT, computer-based training, where you can sit in front of your computer and get training on demand, rather than having to wait 3 months before a particular training course comes around again. You can have skills databases of your employees. So if you need an employee who is an engineer and who speaks German, then you'll be able to go through the skills database and find the employees with those particular skills. And then we have the procurement, the last one here, electronic data interchange, where I send an electronic order to my supplier rather than having a paper one going through. This electronic order gets into the supplier's system and triggers off a delivery to me, essentially using an extranet, where my computer system is connected or given access to my supplier's computer system. And again, this enables effectively just-in-time inventory to be much more readily and much more reliably utilized. It's very important to have continual systems development to keep up to date, to keep things competitive, if you like. Here's just some of the things. The one which is particularly mentioned in the syllabus is radio frequency identification tags. Little tags typically sewn into maybe an item of clothing, which uniquely numbers that item. So every jacket in the store has got a different number. And it means that manufacturers, retailers can keep much better track of what's happening in their inventory, and can indeed link up particular types of inventory being sold to particular people. We have to keep up to date because none of our competitors will stand still. That's important. We have to keep up to date because the development cycles are getting shorter and shorter and shorter, and we have to become more and more efficient to enable us to compete well. There are new accounting approaches such as activity-based costing. Maybe we have to begin accounting properly, as it says at the bottom here, for services being given, these unique services. We need to be able to estimate costs and bill appropriately for those. And just-in-time inventory becoming more important. Big data can be defined as here extremely large collections of data or data sets that may be analyzed to reveal patterns, trends, associations, especially relating to human behavior and interactions. Now, what are the characteristics of big data, and really what does all that mean? And the easiest example of big data is data which is typically collected by supermarkets on your loyalty card. So when you swipe your loyalty card to get a few points that you can exchange for goods at the end of the year, really what's happening is, of course, they are recording in a data warehouse, if you like, your consumption habits, your buying habits. And then they go through this the process called data mining to try to find associations, patterns, clusters of consumption and the like. So it's become a really very big business. Now, what are the characteristics of big data? And really, I think you have to know this idea of the 3 V's here: variety, velocity, and volume. The variety refers to a huge range of different sorts of data coming from different sources. Some of it will be numerical data, some of it will be essentially words and descriptions, some of it may be graphical data, some of it may be geographical information about maybe where you've travelled. So a huge variety of data that has to be held, stored, and then used in some way to produce useful information. There's also the volume of information. Huge amounts of information are now stored, requiring very, very large computer storage facilities. And the data is updated and changes very, very rapidly, very high velocity on it. If you think of a large supermarket chain, all the people who are maybe shopping there on a Saturday morning or whenever the peak shopping time is, in a big supermarket you have 20 checkouts there. There's maybe a couple of hundred supermarkets in the country. There's a fantastic amount of data which is being accumulated on a kind of continuous basis. There is a kind of a fourth V, which sometimes people talk about in here, that we have to be aware of veracity, really meaning, is it accurate, is it truthful, is it up to date, can we believe it, is another certainly worry about big data. So let's think about the typical volumes and where the volumes come from here. As I've already said, we have loyalty cards being swiped at checkouts, but also retailers get a fantastic amount of information from your visits to their website. They know what pages you've visited, they know what products you've maybe expressed an interest in, maybe you've put them in your basket and taken them out of your basket again. They can begin to maybe analyze from that why you only went so far in the transaction, and of course they're just encouraging you to complete the transaction. Social media such as Facebook and Twitter, again a fantastic volume of information there. They know your contacts, so they can look at maybe the photographs you've posted. They can then tag those photographs and identify whose faces appear there and the like. They can maybe analyze what you've said, the comments you've made. They can look at where you've said you like something, and an amazing amount of feedback can be obtained from both Facebook and Twitter and indeed other social media outlets. Mobile phone companies obviously know who you ring. They know how long you spend ringing these people. They know, obviously, that gets into some sort of pattern, like you always ring home on a Friday evening or whatever it's going to be. They know where you are when you make the phone call, because even if you're not, in fact, using your phone at the time, the phone is always sending out a signal, kind of saying, I'm here, I'm here, I'm here, so that an incoming call can find you. And it's easy for phone companies to triangulate. There's a number of different transmitter masts around the vicinity, and they can find out really to within a few meters exactly where you are. They can also look, if you use a mobile phone for browsing, obviously, which pages you have visited. They could, if they wanted to, look at your texts and maybe listen to your voicemails. Internet providers and indeed browser providers, again, they will have records of every site you visit, every page that you look at and so on. They know what downloads you've made. They know all about to whom you're sending your emails. They will, if they want to, be able to read your emails if they're not encrypted, and so on. You enter search terms into Google or even just a top address bar of a web browser. And again, this can all be kind of filed away for later analysis. And finally, as an example of volume, just look at the banking system. If you look at your credit card statement, it knows all the purchases you've made that month and maybe for the last 5 or 10 years back. It knows this sort of doesn't necessarily know exactly what you bought, but it knows the retailers you frequent. And from that, you can get a very considerable insight into what your interests and habits are. It knows, for example, if you often go to the cinema, or maybe if you often go to a particular restaurant and the like. And this can be of very useful information to cinema companies, restaurant companies, fast food companies, and so on. Variety. Well, we've inevitably kind of covered a little bit of variety. We're looking at the volume of data here. But let's just look at some of the less maybe obvious ones here. Obviously, we know browsing, financial transactions, your interests because of the pages you look at, your buying habits, and so on. But let's look here at geographical information. So a company will know, a web browsing company will know where you are when you access their site, because this is all information which is relayed to the site. I said already that when you have your mobile phone on, they know exactly where you're moving about there. And you could imagine a supermarket company begins to get tracking information about where your phone is when you enter the supermarket. It knows where you're moving around the aisles in the supermarket. It knows maybe where you've paused. It will know whether where you've paused then correlates to something you've bought. Whether you paused, maybe looked at something but for some reason didn't put that in your basket. Supermarkets, of course, have often got closed-circuit television cameras in the roof, mainly or originally, to stop shoplifting. But now, of course, facial recognition is getting quite powerful. And they can file away your facial characteristics. They would recognize you again when you came into the store. They are able to tie up maybe where you are because of your mobile phone data with your face and so on. And when you come into the store again, it won't be very long maybe before you get a special offer kind of flashed up as you go past the stand, or maybe a text message saying, last time you were here, you kind of looked at this product. It's now 20% off, and so on. So great potential marketing opportunities, although, of course, as we'll see at the end, some people don't like this kind of what they would regard as kind of spying or record keeping on their activities, even if the activities are completely innocent. There's also geographic information such as photographs. Looking at aerial photographs from satellites and aeroplanes and so on, you can discover maybe where there is land available for building. You can discover through the undulations of the land maybe which areas are subject to flood. You can ascertain quite a lot about the geology which is under the land and what sort of crops might be profitably grown on the land and so on. And the last one I'll give an example of is in jet engine maintenance. Rolls-Royce jet engines, for example. Now, instead of just selling an airline, the plane and the jet engine, if you like, as a once-off, what Rolls-Royce likes to do is to essentially sell you the engine plus a kind of maintenance contract. And what the engine is doing all the time it's flying, it is transmitting data back to the Rolls-Royce kind of headquarters in Derby in England. So lots of sensors on the engine about vibration and temperature and so on. And it allows Rolls-Royce really to predict when maybe something is going wrong. If the vibration begins to increase a little bit, it's not at any danger level or anything of that sort, but just it's going a little bit an increase, then maybe they say we need to perform a bit of preventive maintenance on this engine. This is obviously safer for passengers, but it also prevents a lot of disruption for the airline, because if you do preventative maintenance on a timely basis, there is less chance of them trying to start up the engines, find there's a technical fault, and you all have to change to another aeroplane. We've got variety, we have volume. I don't think I need to say about velocity again. This information is just tumbling in continuously to the large, essentially data warehouses where the big data is kept. Then what takes place with this huge volume of data is known as data analytics, basically analyzing the data. Various types of data analytics, data mining, looking at data, look at patterns, establish relationships and associations where people maybe buy particular products together, where certain products are particularly popular. Maybe it correlates to weather, maybe it correlates to something which is on television, and so on. This can help the supermarket maybe to predict when big demands are and to ensure that they're not going to run out of stock, or maybe they put a special offer on to encourage more sales of it. Predictive analytics, trying to predict consumer behavior. A common example here is data which is collected by airlines. They will know what sort of seat you prefer, whether it's window or aisle, or whether you're one of the really minority people who likes the center seats. And maybe what they can begin to do is to offer you, maybe at a cost, but say, aisle seats, can be booked in advance, or they come with a particular cost. Maybe they know that you're susceptible to an upgrade from economy to premium economy. You've done that before. Now when you book an economy seat, they can, entice you maybe to spend a little on upgrading to more leg room and more comfort and so on. They'll also be able to predict maybe whether you're likely to want to have hold baggage, checked in baggage, whether you're likely to want travel insurance to hire a car. Based on previous patterns of behavior, they're trying to predict future ones. Text analytics, scanning text such as emails and maybe word processing attached documents. I think some of the large search engine companies do this. Some of the large internet companies do this when they when you send an email and you mention a particular product on it. Then this data can be sold to consumers. Perhaps there's an element of making it anonymous when it's sold on, but it's something which will be valuable for the producers to know. Voice analytics, where you listen to what people are saying. I'm sure you have now phoned up organizations, and rather than saying, press 1 for this, press 2 for that, press 3 for that, they will ask you what's your name, what's your date of birth, what's your account number, and you're speaking normally, but the machine understands what you're saying. And then statistical analysis, looking at trends, correlations, changes in behavior. For example, Google has proved to be quite good at identifying where there is an outbreak of disease happening before the authorities are really aware of it. So if, let's say, there's a flu epidemic breaking out, so it's in a particular town, is kind of where it's starting. People feel as though they've got influenza, they've got a headache, they've got the temperature, they're shivering. What many of us do, we go off to Google and we put in influenza or influenza cures or something of that sort. And obviously if a significant number of people begin doing that in a town, the chances are there may well be an influenza outbreak, and they probably do that before they go and see their doctor. So well before the health authorities are aware that there's a problem or an epidemic, Google and other search engine companies can pick this up really quite accurately. Big data dangers. Well, maintaining the data, collecting the data, maintaining the data, analyzing the data requires huge processing power, and there's a considerable cost associated with that. There's regulation. Many countries have got regulations affecting the maintenance and the holding of personal data. And there are rules and regulations and indeed laws about what data you can keep, how long you can keep it for, what might happen if you keep incorrect data which doesn't have veracity, basically. Are you allowed to collect that data, let's say in Europe, and transmit it to a server or a company which is in America outside maybe European Union legislation and so on? So we have to be careful companies have to be careful to keep on the right side of the law. Apart from there being penalties that maybe have to be paid, there are considerable PR risks there if companies are found to be exploiting personal data without people's knowledge. There's the loss and theft of data. We've had a lot of examples of hacking, basically, where hackers break into the data warehouses and they download all sorts of data, people's names, addresses, bank accounts, credit cards, consumer information, passwords, all sorts of stuff, causing potentially a lot of damage. Veracity, we have to be careful that the information is correct and up to date, because bad things can happen. So if they miscoded, let's say they thought that you hadn't paid off your credit card or hadn't paid your rent, they got your name confused with somebody else's name, you end up with a bad credit record, and then you try and borrow money and you're refused and so on. There can be real damage caused to people, and the company may well have to compensate that person for the damages caused. And the final area where people worry about is employee monitoring. For a long time now, when people are in supermarkets and you're scanning stuff out, they know exactly how quickly each person at checkout is working. In a call center, they know exactly how long on average you spend on a call. Because you have to hit a nice medium, you don't want to be rude to the person, but nevertheless you don't want to be kind of spending 15 minutes chatting to them about the weather and so on, if other people are waiting. Increasingly, people wear name tags or, a little badge around their neck. These increasingly have ways of identifying that person and maybe transmitting that person's whereabouts to be recorded. So they know exactly what departments you visited. They maybe know who you've talked to. They can maybe listen to the conversations. They can look at emails which you've sent using the company facilities and so on. So there's very, very close monitoring of what employees are doing, where they are in the business, who they've talked to, and maybe what they've said. And of course, there's a natural worry that this is maybe impinging on people's rights to privacy, whether or not you're an employee. So here are the suggested questions for Chapter 6.